Welcome back to the Dividend Diplomats YouTube channel, guys. You got Bert, the man, the hitman, the hurt locker, and Lanny from the Dividend Diplomats, guys. We've got not one, but two under the radar, higher dividend growth stocks that could be right for your portfolio during this volatile all-time high stock market.
Subscribe to the channel, give this video a thumbs up. We can't wait to talk to you about these two undervalued dividend stocks. Man, oh man, these are ones we have never talked about on our channel before in the history of the Dividend Diplomat on
No
YouTube
cover.
and even our blog. I can tell you we have never talked about these two dividend stocks, so buckle up and get ready. Let's talk stocks.
Strap in, guys. I'm very curious if you're going to own these stocks. We run our Dividend Diplomat stock screener to look for stocks. The price to earnings less than the S&P 500, preferably less than 18, preferably, less than their competitors. Dividend payout ratio, preferably less than 60%. History of growing dividends, higher dividend growth rate, the better. And then we also throw in some other stuff like, positive growth in revenue, earnings, current ratio, quick ratio, the whole gambit we look at. And we stumbled on these two stocks that are definitely under that radar. Two stocks that are billions in market cap. One's almost 20, one's almost 50 billion. You may have heard of one, maybe you've heard of both. But Brett, I'm pumped to just check out each stock one by one here.
That's right here. So let's talk this first company. We're heading into the home construction sector. Ooh, yeah, I bet your ears are perking up right here. We're talking home construction. Lanny, who's company number one?
Guys, one of the biggest names in the industry. We're talking Lenner Corporation right now. Ticker symbol is LEN,
Love it.
LEN.
Love it.
Now, this stock, interesting,
Hmm.
just interesting.
Yeah.
Um,
Market cap of 50 billion. So they're a pretty large company here. We're not talking some small chunk change here in the home construction sector.
and we all know that, overall, they're trying to build as much as they can, as quick as they can to get inventory out there to market. Obviously, pricing is where it's at. Rates are still where they are at. Buyers are still pent up right now, waiting for that right house, myself included. And yeah, interesting. This company is up 24% this year, but well, they are outpacing, I guess, the S&P 500. But it'll be very interesting to see where the stock metrics fall for Leonard Corp to see if this is a stock to buy right now.
So let's jump right in here. Their price is $182.19 as of Friday, September 20th. Earnings per share is 14.32. That's a PE ratio of 12.72. So well below the S&P 500. Well,
Solid.
yeah.
Dividends at 50 cents a quarter, $2 a year, 14% dividend payout ratio for Leonard Corp.
All right. All right. 5-year dividend growth rate 74.39%, although they're increasing years. Goose egg. Looks like this company juiced up that
Front
dividend
loaded.
during during the construction boom with a low interest rate environment, and then it kind of had to slow down here as things tightened up a little bit over the last year.
Yeah, definitely heavily skewed. They went from 4 cents to 12.5 cents in a year. So
Now
that
those
kind of does it for you. And then you said, all right, let's double it again, going from 12.5 to 25 cents. Then you go from 25 to 37.5 cents. And then you go from 37.5 cents to 50 cents. So they're back to maybe like 1 year really on a dividend growth. They kind of kept 37 and a half during 2022, 2023, but 2024, they're back, but I can't say a full year yet, simply because they haven't gone through the whole year. So from a technicality, they're at one.
just cracks me up. It's clear that they just were crushing it during the housing boom. During times where home prices were just going through the roof, this company was just destroying it hand
Set
over
the
fist.
price, set the price for what they're doing. But the dividend yield right now is 1.1%, which is
And
slightly below their 5 year margin of 1.13.
so even with the juicing dividend yield, it is still growing, and it's all consistent. I think that's pretty interesting. Over the last year date, up 23.55%. Last 6 months, only up 9.37%. In the last month, only up 1.93% too.
And if we actually look at the stock over the last 5 years, if
Tell
it
me
wants
about
to load up for me, I don't know, it's up a couple 100%,
it.
bro. You
I
can
was
check
gonna say you would hope it was if their 5 year average yield is in line over the last 5 years, it has to be. Yeah, it's up 236% over the last 5 years.
it. Yeah, so that's
But here's your lesson. PE ratios don't always they don't have to be astronomical if the company's crushing it, because if earnings are growing, your price to earning and your price and earnings are both growing, the PE ratio is not going to shoot through the roof the same way. So this is an example. They're crushing it. They're growing their price and they're growing earnings very well.
yep, yep. So overall, solid stock.
Yeah.
Let us know what you guys are thinking about this stock. For me, I'm trying not to own any new positions, but it is easy business to understand. They're in the construction build.
Yeah.
So,
Well,
pretty, what they do. It's not some unknown thing on how they can figure out a way to make money here.
that's right. So let us know if you own Leonard, if you've owned them before, have you been riding this boom, or have you bought one of their new houses? Let us know what you think of that too. Be curious what you think, how they fit in the grand scheme of it.
So this next one is going to be a fun one to do, guys, because we've never really covered this industry. It's a very, I don't know, kind of negative notation industry. No, it's not a sin stock. We're not talking tobacco or liquor or anything like that, or gambling or whatever. But it's in an industry that, a dying industry, as some would say, or a very messy industry from how businesses are ran from that standpoint. But we're going into Steel Dynamics, ticker symbol STLD. Steel Dynamics, Bert.
You are right. We have never covered steel companies on our channel. That's
I don't think we have, but
no, absolutely not. It's interesting though. They're here just looking at it up on Google Finance here, founded in 1993. So they're a relatively new company, headquartered out of Fort Wayne, Indiana, 12,600 employees. Third largest producer of carbon steel products in the United States, among the most profitable American steel companies in terms of profit margins and operating margin per ton. So they're crushing
yeah, you have to like that one. That's in their tagline for what they do. They are a
it.
profitable company. We have large margins, and we're one of the biggest to do it. Um, but are they a great stock to buy? Are they a great stock to have in your stock portfolio? Trading at just under $120 at 119.83. Analysts expect over $10 in earnings, leading to a PE ratio as well below 12 times earnings.
All right, below 12 times earnings, their dividend is $1.84 to payout ratio of 17.57%.
This dividend growth is interesting, man. I mean, been doing it for 13 years. So post financial crisis, obviously, been doing it at a rate of 15.91%, which is huge. And if I just take a look, you know, again, if my computer wants to behave at what the last increase actually was for Steel Dynamics, Bert, I'm trying to load it up.
I got you. I got you.
It's taking me a while, but it wasn't the greatest. It wasn't the worst.
Yeah.
Under
Oh,
10%.
okay. So not bad there. Not bad from there. Let's check out that yield. That dividend yield is 1.54%. It is 34 basis points below that 5 year average yield of 1.88%. So not the highest yielder, but at least strong dividend growth, even if this last year's dividend increase was below average.
Yeah, so obviously both stocks trading below their 5 year average. Year to date, only up 1%, down 17% the last 6 months, which is why it's on the radar because it's just getting murdered. As everything else has been rising, they're down 17%. I think there was some other merger news about what was going on within the steel industry, that they were going to acquire possibly another company or vice versa. Let us know if you guys pay attention to the steel industry below. Hmm.
All right, so let's see. Let's pull the metrics up here. Lanny, today, are you thinking houses or steel?
Hmm. You need both. No.
I mean, it's true. Facts.
Yeah. You know, both have solid growth rates. Are they both sustainable? Well, Steel's done it for over 13 years, right? Now,
Yeah.
the last one was lower, even though they have a lower payout ratio, but that could have been because of the cost and what they were expecting to be spending on something else. Um, again, just not a buyer for new positions right now. But, if you're interested in these industries, these are two of the best.
Yeah, they're two great stocks. Not my stocks right now. Always fun to take a look at them and see what is going
Two
down.
new stocks.
Yeah, everyone. So let us know. What do you think of Leonard? What do you think of Steel Dynamics? Are you buying, holding, watching, or selling, or just ignoring altogether? Let us know. Throw it down there in that comment section below.
Come on, guys. Smash that subscribe button. Give us a thumbs up. Let us know what you think of Leonard Corp or Leonard Company and Steel Dynamics. Are these two stocks to buy right now, guys? Again, thanks for stopping by. Let's get the financial freedom together. Oh, and you're either with us or you're against us, Jack. That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.